Right. So I've done a bit of marking up before the meeting. And we can start with gold. It's being requested. Gold. Let's have a look at gold. Right. So if we look at this, let me know you can see gold okay. What we've got here is a scenario whereby looking at last week's range, okay? So down low, I mean, gold's been in a significant bull run. So starting down low, we've been climbing, right? And we made a high on Friday. So that's the high of the week, last week on Friday. We've subsequently sold off pretty heavily, breaking that structural point Thursday's, let me see here. Yeah, it was actually Friday's low in Asia. That's Asia, that's London, and that's the US session. Okay, so we broke Friday's range, the low on Asia, and also therefore that's a structural point breaking that bullish trend. So technically, you could argue that we're now on the backside of that trend. So we're in a bearish environment. Okay. Now, what's happened? We've pumped up in Asia and we broke out of the Tokyo highs and this sort of breakdown level where we broke the trend line and we've broken down. So we've come up to test that and break through. So I'm going to call that a significant move up and mark it as a rise. Okay, that's stage one in the pump up. Then we got stage two over here, and stage three at the heights of London session. Right, so you've got 1, 2, 3 levels of rise, a sell-off that's broken structure again. So effectively what's happened is we've started to break down this pump. So again, we're in bearish territory. Now, what's significant about this third pump up is that we broke the closing price of Friday. So we broke up, it's acted as resistance, and it might continue to act as resistance. Therefore, rallies could be an opportunity to sell, and you can target the low, for instance, of Friday, right? The Asian lows. There are likely to be stops below this rally here. So those that have gone long on the day, breaking out of Asia's highs, could well have stops below here, which could well be targeted on a move lower, if that were to pan out. So I'm not arguing that this is a definite scenario. You can't, but we're just looking at the downside prospects for our New York session. The upside prospects would come back to life if we get back above the closing price and start stacking up above it to squeeze higher into this peak formation that was made on Friday. But while we're below the closing price, my bets are for a downside continuation. Okay, so that's my outlook for gold. I'll be monitoring this at levels. I'll be looking at round numbers like 1980. I'll be looking at the closing price, looking for resistance in around here for an opportunity to short. But much above the closing price, then I'm losing interest on the short side, and I'll be flipping the script on that. But it's also day 2 of the 3-day cycle. Now, what I mean by that is looking at last week's day count. Those that have been following me for a while, we use this day counting system. There are variants of it, but the day count, which is a which is a continuing cycle. So day 1, day 2, day 3. Day 3 then turns into day 1, and so forth. So we had day 1, day 2, day 3 on Wednesday, day 1, day 2 on Thursday, day 3 on Friday. So day 3 turns to day 1, and what you can see is day 2 be a continuation. So we've peaked out at the high of last week, and we're looking for the downside continuation on day 2. So we've already seen that with that break. We've already seen the downside continuation because we've broken the low, but perhaps we're pumping up to come back down, right? So if we were to look at a 4-hour chart, that would look like this: a impulse to the downside, a bullish correction that's petering out, decelerating for the downside continuation opportunity for today and potentially into Wednesday. Therefore, we might have seen a top in gold for the foreseeable future. All right, so moving over to dollar Swiss. If you've got any questions on gold, let me know. Dollar Swiss. Right, dollar Swiss. Dollar Swiss, what we saw on a daily basis. So this is the daily chart now. So we've got last week's highs, last week's lows. We've been dropping all of last week, lower lows. So what we might expect is a correction. Now, we've already seen the correction. We've already started to see a correction, right? We've had a strong move up. And this is a first green day. I say first green day because most people will have their charts colored differently than mine. They'll have a red candle for a down day and a green candle for an up day. I use different colors for my own preference, but just call it a first green day. And what you can expect following a first green day is a continuation. And we're looking for a second green day close. So that is a scenario where we can be looking for opportunities to buy low in line with the potential bullish correction. So on a day like today, where we're already down low, so we've pumped up, we've come down, perhaps we're going to move back up. So that's what I'm waiting to see. And when we drill it down to the current time on this 15-minute chart, what you can see here is this closing price from Friday acting as support. We did have a break, but perhaps that was a false break. And now we're pumping up out of that closing price, that support area, dump, pump scenario for the day ahead. All right, so we're looking for a strong dollar, which would force gold down in line with our thesis to drop, and a strong dollar to pump up the Swiss towards where? Well, we can start looking at the structure of the market, and we can look at this fair value gap up high, which is essentially an area where the price could be drawn to fill orders that have been left behind, right? Those poor sods that were trying to sell up high, but the market exploded without them to the downside, and the market might fulfill its function and fill those orders to the upside. So that could be a target to the upside. Essentially, you're looking at Asia's high, or even as far as the high of the day, and higher if it's going to be in line with this correctiveness into the shorts from last week. So we can look at levels, as I've marked off here with the blue lines as targets, whatever whatever it is that you want to do. You can look at the average true range of the day. You can target that as a level, and so forth. All right, so I'm bullish on dollar Swiss at the moment. Now, what I'm waiting for um, is for confirmation of that. So, I mean, we've got this W formation on the 15-minute chart. All right, we're now into our trading zone. All right, so we've got that first hour of the New York Open done with. We've come low, we've pumped up, and now we're looking for confirmations of a continuation to the upside. So we're looking for bullish structure. We're looking for support. We're looking for candles on the lower time frames. So let's go down to the 5-minute, for instance. We're looking for candles to confirm the bullish bias. So do you want to be chasing a move? Probably not. Perhaps what we'll see is resistance play its role here. So this is the point of control on the day. Perhaps it's going to act as resistance. If it does, then we'll be looking for failures or prospects of a failures on the downside, prospects of this closing price playing out its role as support again and building a bullish case for the continuation for later in the day. We can use time rotations. Perhaps we can look at 8:30 as a potential entry time, depending on how the price behaves around the closing price. It may continue without us, and so be it. If it does, if we get a break of these highs on, say, a 15-minute rotation, right, and if we get bullish, if we get confirming bullish structure, then perhaps that could be the entry. So we've got this peak formation down low. We're pumping up. We're testing resistance. We're looking for a break of structure. So at the moment, we're still front side, arguably. Are we breaking out? Well, let me see. No, we're backside. So we're in bullish territory now. All right. And we've got that level there as a structural point. So we're piercing it. Perhaps we're dropping back into rally. So be alert if you're looking at dollar Swiss, just as an idea. Right, euro dollar. Euro dollar was an inside day on Friday. Now, what's happened is we've pumped up, we've taken out the stops, we've come up to the high of last week, we've pumped up. So far, into this peak formation, we're forming, this is the 5-minute chart, we're forming an M formation. That's a death line drop, and there's no reason why you can't be taking that short. Bearing in mind, we've got the closing price that could act as support, so keep that in mind. But again, on dollar strength, we're looking for a downside continuation, and we're targeting the stops below Friday's inside range. So we've pumped up. That's a strong high. We broke structure over here, right? So it's worth noting as well. We broke that structural point there on that drop. We failed to make a higher high. We're breaking that structure point again. So my best bets are to the downside. My bias is to the downside. We are backside of that old bullish trend. So we're in bearish territory. Right, so there are prospects of a move to the downside. Again, I'd be looking at timing rotations. So the 15-minute candles over here, I'll be looking at levels. Where do I want to get in? I want to be getting in at round numbers. 106. You've got last week's high. That's effectively, this is a broken down market. I'd just be wary of the closing price. That's all if you're looking to short. So, yeah, so that's a prospect for a drop. We can pull out to the 830 mark as well. So we're certainly making the case for a move to the downside with euro dollar at the moment. Right. What else are we looking at here, guys? The Aussie. I don't think I liked anything about the Aussie. You can't see the share screen. Right. Could you try? I'm sorry to answer late. Could you try? Well, I'll reshare it. Just 1 minute. Right. Let me know, please, if you can see that screen. Meanwhile, we'll continue. Excellent. Okay, good. Now, this is recorded, so you can go back over the recording. We'll wrap up relatively shortly, unless anyone's got any further questions, but we're going to look at the Aussie, and I'll send you this video in the chat room so you can play it back. I was saying the Aussie, I wasn't looking at anything with the Aussie, really. With the Aussie, we've already taken out stops on the inside day on Friday. And if the thesis is strong dollar, then I guess this is the pump, and we're looking for the dump, closing price resistance. You've got the M formations in play. You've got a micro one up top. So the Aussie, I'm biased short. We're breaking structure to the downside, but it's not the best category. It's not in my best trade setup category, whereas the others have been. Because we're already down low of last week's range. So you're essentially chasing what's already playing out. I'd rather be shorting up high, not down low within a range. We're sort of midpoint of the day's range as well. It can go either way, really. But if the dollar does strengthen up, then it's a no-brainer. And the Aussie is a risk-off currency. So if markets are pricing in, the risk of this crisis in the Middle East, then you'd expect the Aussie to suffer on the back of that. But fundamentals aside, I mean, we're essentially backside of the recent rally. So I'd be looking for shorts, again, looking at the time rotations. So we're coming up to the end of this 15-minute rotation. So this 15-minute rotation here, perhaps we can either see a downside continuation or a pump up on the next candle to retest this closing price for the blow off. So perhaps we're going to see a move up. We're now 8 seconds away from a new 5-minute candle and 15-minute candle. Right, so now we're a fresh candle. Perhaps we're going to pump up into the closing price, looking to short at 63. Let's have a look here. Well, I guess the closing price really. All right, so prospects of a short from the closing price, if we get a retest of that and confirmation. I'm always quite cautious of chasing the breakout. So this is a breakout. And quite often when you get these breakouts, more often than not, you get the pump back up to catch the first mouse that's tried to sell that. So you get stopped out in trying to do so, and then you get the real move. So just keep that in mind. So that's why we're looking at these rotations. Perhaps we can be looking at an 830 opportunity to short at the levels, at the closing price, in and around there. So just monitor the behavior of price as we come up into here. It could be an 8:30 trade, an 8:45, a 9 o'clock, perhaps, or maybe it's just going to stack up all the way into the Wall Street Open. So perhaps the Wall Street Open will be the catalyst where all the volume comes in and the market's already made up its mind by breaking structure. It's done the groundwork for us to take easy pickings on volatility. Right then, any other pairs, guys? Euro sterling, okay. Now, I've not done any workings on euro sterling. It's a bit of a slow mover for me. I don't tend to trade it. So give me a second. We'll go out to the top-down analysis from the daily chart. Well, it's stacking up for a short, just as per the down day on Friday. So we've pumped up. Perhaps we're stalling and we're coming lower. We've already started to come lower on the day. Oh no, we've moved up. But perhaps we're moving up to come lower. So we're pumping up into the sell-off from Friday. Right, so we've broken structure. So we've broken this structural point over here. Right, in that drop. And in doing so, as I just explained in the prior video, when you get that break, you tend to be the first mouse trying to sell it off, and then you get squeezed with the move up, stopping you out. If you've got your stop up there, so it's done the stop hunt. Perhaps that's the stop hunt. We've got a death candle here, locking in the high for the day, perhaps. I just want to have a look at the closing price. Closing price is really down low, acting as support. But as I said, we might have seen this. This is a stop hunt above this shoulder. So perhaps the target could be the closing price. We've got an M formation here on the 15-minute chart. Again, we're backside of that pump out of London. Right, so we've broken structure. Again, first mouse, just be cautious. We've come into support, which is the breakout area from Friday, which is now acting as support, funny enough. So just be cautious with this one. If you're looking to short, then you want to see this act as resistance. This area. Perhaps we're having a retest into this area to come lower and retest this support area and then breaking through to the other side. Break on through to the other side, and you've got the closing price as a target, and then below there stops for a downside continuation. 87 the figure on the downside, and you have 87.25 up high. and then 87.20-ish as a resistance, perhaps. A break of the highs would likely open the path for a continuation up into this peak formation. So just keeping an eye on that one as well. Yes, I can do a Fibbo on the euro. So what do you want me to measure? So what have we got? We've got a right. So I mean, we can measure this here. So you take it from the top. So measure this leg of the impulse, top to the bottom. And what I'm looking for is resistance at the 78.6, which we've got. So then at that point, you're coming down to your lower candles. So let's do that. So it's nice you get a doji there, yeah? So a bearish engulfment would likely signal opportunities of a move lower. So if you do that, there you go. And then if you go down to, say, a 1 minute chart, if you're scalping the session, we can do that. And then what you're looking for is the behavior of price to confirm your bearish thesis, because it's resisted at the 78.6. We're essentially backside of that trend. You see here, that was the high that was put in, and this sort of area over here with the lows. We've broken those lows. But again, when you get a breakout, just recall that you can get that move up. But this one seems to be acting as resistance. And then it's a matter of your risk management and how you want to play with it. So we've pumped up, we've dropped. Looking for any potential support structures on the downside. I mean, you could look at that and say, well, look, I think this is heading lower. I mean, it could pump up. But that then depends on your risk management. Where do you want to put your stop loss? So you can have it above here. If you think this is going to take off, you want to have a look for signs that it is going to take off. You've got the M formation, pump up, engulfment, so that seems to be heading lower. I mean, you might want to bring it in here. If you're just looking for a quick scalp, no idea if it's going to play out. Or if you want to be conservative, you've got your stop up high, but therefore it's a session trade and you're looking for a drop into, you're looking for asymmetrical risk to reward. You want at least a 2 for 1. Bring it down a bit perhaps. And you're targeting the closing price perhaps. Right, but that's essentially how I'd go about using the Fibonacci. Came up pretty hard at break even, taking money off. Quite a nice little trade that was. So there we are. So that's how you go about using the Fibonacci. You're using the Fibonacci to determine areas of potential resistance on whatever time frame you're trading. So that was the hourly chart, I believe, was it? Can't recall. No, it was 15-minute chart, wasn't it? Yeah, we just measured that 15-minute impulse. Impulse correction. I mean, you're looking for a deceleration of price as you come into the 38.2, the 50, the 61.8, and then for me, the 78.6 is my line in the sand. If we break that, which we're doing now, I tend to try and stop looking for the price to drop. That is a resistance area for me on the chart. Screen is gone again. Right, okay. So Rafazo, if I've put a educational Fibonacci video in the education section, so I'd check that out as well. And it should, if you've got any further questions to it, hello. Interaction required. Browser require using interaction before they will play audio. Just click. What's going on with that? Presuming you can see what I'm showing you here, but in the education section, wherever it is, yeah, there you go. I think it might even be the last video, that one there. So I don't know if you can see that video, if you can see the Discord. I've just tried to share that there. But anyway, so I'm going to wrap things up here, guys, and I'll be putting this into the chat. Hold on, wait a minute. Saying I've been disconnected. Right, okay, guys, I'm going to finish up. I think all of that, you didn't hear anything what I was saying, but I'm going to send you all the information in the chat room, guys, all right? Okay, so wrapping up, good luck for the day ahead, and we'll see you in the chat room.